So currently it is 6:28 p.m. Eastern Standard Time. So just wanted to start up the stream and mark some levels on here going forward. So yeah, let's look at the new week opening gap on the 1 minute chart first. So I'm just going to be writing these levels down. I like how the gap is larger on NASDAQ. So that's the only thing right now. And I like this buy side here. And S&P has buy side here. But considering we're so close to it, it's pretty high probability on S&P, and then watch NASDAQ, just a little bit more room. So I would say 2440 NASDAQ, and then 5857 on S&P. That right there. So just continue watching these levels. Or marking these levels. And I'd be watching to see how much more does this spring up into that. So I'd go on a 15-minute chart and measure now. The only two things I'm really looking at here are these two charts. And on a 15-minute chart, how high does this candle go above this candle's high? So just that blue line. And I'm not going to write buy side here because I want it to look clean on this. But I will gray this out. And then there's that buy side there. 2440. It's not the same protocol. Does it spring up? And if so, how much? And this is where you'd be closing a trade. You'd not be entering here. The idea would be, depending on what time you're using, I personally don't like to do anything within 6 p.m. Wait for 7 p.m. But for logging purposes, you can see that we opened and came down. And on the S&P, we did the same thing. Opened, came down. These lows here. Compare these between all indices and then look at the dollar index. And then you can see that we went into a buy program. This BISI here, respected, creates another one. Doesn't even go down into it to touch it. Continues trading higher. And right about here, in somewhere in these three candles I told you, check this high and watch how much it springs above it. So now we're just measuring continuation further into these stepping stones. So the most apparent imbalance to the left is this on a 1 minute chart. And so that's the combination of a volume imbalance and a SIBI. And so that would be the next objective, making this a short-term high to be attacked. And then NASDAQ up here. So I'm not saying it's gonna hit that right now, but that's the idea. Is we came up here, and if it's gonna go any higher, we have to see how low it's gonna go, where it shows support, and then this would be a partial, and then this would be closing, or another partial, depending on where you want to close it. Either this low or this consequent encroachment, but not the high. So you shouldn't have a limit order above the consequent encroachment, because then you're expecting for the gap to close in, essentially. So that's not really what we're looking for. And for targeting purposes, you never want to target the high of a sell side imbalance, buy side inefficiency, and then you never want to target the low of a buy side imbalance, sell side inefficiency. Those equal highs. And right here, I drop down to a 15-second, see what's provided. So I'm watching that imbalance. Now it's a very, very tight range, and because the time is 6:35 right now, the only reason, or because the time is 6:35 right now, that's the only reason I'm going on a 15-second chart, because this thing is very slow right now. And we know that NASDAQ is a little bit of a laggard right now, because it took longer for the NASDAQ to hit that blue level right here than it did for the S&P. So you can see the first booking was 6:30 and 15 seconds. And then the first booking on that blue level was 6:31. So it took about a minute and 45 seconds. So now this would be a six sister approach. This buy side here was booked. We hit the low of that. So that's another partial. NASDAQ is still below that low and still below that. We know it's a laggard, so you'd begin to buy in here and then target about this high and this low here. So the levels on that would be 24.42, and the low of that is 24.43. So just a handle in between. This one's going to be really short. I just wanted to focus on NASDAQ and S&P, not so much the dollar, but that will be incorporated into my analysis. And so now I'd want to see it just spring up into here. It should just pop like So at this moment in time, I'm thinking to myself is that right here, I set my expectations to see it want to pop into these relative equal highs because we have a swing high here and a swing high here. And right now it's not doing it, but it's also at a point where me personally, this is where I would be sort of more sensitive. So on all down close candles is when I guess my psyche, I don't know if that's the right word, but my psyche would be thinking that it's going to go against me, and then every time it's going up, that's when I'm more euphoric. So essentially, that would be like, I'm kind of referring back to month 1 of core content, is that you buy when it goes down and then you sell when it goes up. So just because it's going up, that's not something like, I don't really know how to say this, but I'm more focused on down delivery, or like trying not to be as fearful of down delivery. So I'm more open to it, going down, and like, hence, first things first, I don't even have a stop in this right now, so I don't have a horse placed in the race. So that removes a lot of fear. And second, I'm only tape reading it, so I'm allowing for those quote unquote pinball volatility sort of movement, where just because it didn't go up here and quote unquote fill my hypothetical limit order, I'm not worried that it's going down, because I still believe that these two relative equal highs are nice. Like, it's gonna come up there at one point or another, even if it goes, all the way down here. It can still come back up and gyrate down and then work its way higher. I'm not saying it's gonna do that, but that's my thinking, is that removes a lot of fear from my thought process. And so as this is trading down, I'm thinking to myself that, and it's not that big of a deal. It's just like preserving a target. It's like when you go to get good food, just because you didn't finish it all in one day doesn't mean, it's bad. You save it for the next day. And like, that's the same thing as targets. So like the food from the restaurant, think of that as your target. So just because you didn't get your target right now, which is not necessarily true, because we were looking for this blue line. So this was the target. This one here was the target. We said, watch this blue line. How much does it springboard above it? We said, watch this low. And then the consequent encroachment. So I said no limits above the consequent encroachment. Why? Because that would be the expectation that it's going anything above 58.75. So that was what I was saying, is it's going to come to this low, partial here, partial here. This is perfection. That's the takeaway. NASDAQ, remember, we were not so focused on NASDAQ because NASDAQ was the laggard. It was the slow one. Alright, I'm just going to let this pan out. I'll be on mute probably for about 15-20 minutes. So I'll be back at before 50. There we go. I'll be back. I apologize for being gone for so long. Here's your delivery, though. Very, very, not choppy, but all these imbalances, these voids, you wouldn't see this in the New York AM session, so let's see. It was about here. So these relative equal highs were the highs I pointed you out to. Came down, swept it that low by a tick. I told you this is good targeting. That's sort of what I came up with the nickname for it. So the reference or the analogy I made about getting good food and saving it for the next day. So if you get some Portillo's, you don't want to finish it all in the first day of getting it, or even the first hour or whatever. You can save it for the next day. And so you can scale that idea basically and say, it was this candle, I said I wanted to see it pop up in there. The idea of the quote track booking this level when this price was over here, I like that. I felt that it was going to draw a little higher. My idea or my thinking was, this is not the high, and I also was thinking that this is not the low, so that's why I allowed for it to gyrate a little bit, and I came to the expectation as far as this low. So essentially this would have been like a stop placement, because you don't want to trail your stop too tight. So below this is safe, I mentioned, and came down into there, swept it, imbalance, traded into it. Look at just the cleanliness of that. Even on the 15-second chart, it's not perfect, but the criteria of this swing low being protected from the 2022 mentorship is a great idea, and you can see the immediate feedback. I mean, this is really satisfying on a 15-second chart. I like it. Just about this much zoom. Right there. There we go. So gaps up and then consolidates, expands, runs those highs. Anyone who went short got punished here. So you can see how the market is working to put people in pain right now. It's not really filling any objectives. And that's like this is not like a seek and destroy profile. It's just like a characteristic that occurs. And so you can see right here we have a high, higher high, and then these highs here. So layered liquidity in here. What does it do? Runs it, and what is it gonna do next? Return back into the range, and it's gonna most likely trade below these lows now. So I would say this low is the next objective, and then we take a look at where price is right now, and it was pretty close already, but that's the low we're looking for right there. So very, like, it's very, very small baby steps in price. We're not looking to do anything crazy and catch this high and then scale it down to the lows or anything. I mean, there's a lot of price fluctuations that occur from here to here now, and going into the future you have this entire range to work with. So you can see you can really form ideas very, very fast on a 15-second chart, and that's sort of what I've been picking up on, just for no reason really. I always knew I was like a short-term trader, but 15-second I really like, and it's amazing. It's really fun. Like I'm really enjoying this, especially with like a new paradigm shift that it's like being wrong is just more insight. It doesn't even feel like being wrong anymore. It just feels like more insight, if that makes sense. I don't necessarily look back and think to myself that, oh, I was wrong 6 times and right this 4 times. Like, it's more, I was wrong, this many times, but it led me to be right this many times because I got more insights. So, I mean, you can see that I essentially, in targeting purposes, when it came up to this high, this low, and it was going higher, this is where you would be selling, correct? That's what I mentioned over here too. I didn't want to see it go. It's not that I didn't want to see it go, it's for targeting purposes. I wanted to be out of the position here. And so, because I wanted to be out of the position here, and it came up here and overlapped it multiple times, if you just extend it, each candle, we count. This is going to take some time. 1, 2, 3, 4, 5. This is going to take too long, actually. You see that it overlapped it a couple times. The high, the consequent encroachment, and the low. Multiple times. So we're focusing on this consequent encroachment and this high. And looking at the upper quadrant because that's the highest form of premium. And so both NASDAQ and S&P trade through it, above it, and then come back down and then return into it, and you can see the NASDAQ in the upper quadrant. This imbalance, this is like fine targeting, fine entries, how to reduce your entries, because you're looking at one imbalance on I think it was 1 minute chart, and then you're allowing it to build micro market structure inside, and then you have more insights, and you can see the precision of the candles. This candle's low, this candle's sell side delivery, closing below the quadrant, opening power of 3 essentially, trades lower, and then comes back to it at a later time right here into this at 7:13 p.m. and then sends lower. So now we're inside the new week opening gap. So you measure the quadrants, and the only reason I'm selecting this new week opening gap as a catalyst, it's not that it's special, it's not that because it just formed, while that is a good thing, it's simply just because we're trading at it right now. So that's how I'm keying up on that, is right here. And then if I had a notepad, I would just look at the notepad, or I would look at price and then see what levels are closest. So sometimes I do use a notepad, but it takes a lot of time, so I'm trying to actually use a notepad more because it's a little harder, and I like that. So that's that kind of sounds weird, but like I don't even know how to describe it. I like the notepad, but it takes a lot of time, and I don't have time right now, so that's the only reason. But I'm gonna end this session in 8 minutes now, so otherwise I'll be here forever. But I don't know. Tomorrow, will I be live? I actually have a hard time waking up, so that's kind of why I'm not live in the morning. That's it. Otherwise, I really want to be live. It's just that I can't wake up. That's it. So look at how far NASDAQ is from that blue line compared to ES. So ES can come up as far as this candle. That's it. If it goes any higher, then we abandon the idea of it coming down into this high and then into the consequent encroachment. So that would be 58.54, let's say. NASDAQ. If we do go down here and we're relative to this price swing from here to here, if we just start sinking lower, and it respects this imbalance in this order block as a whole, like a nesting of PD arrays, and we see one big candle pass through this, that's a lot of conditions, but I think if we see that, then the NASDAQ can see this right here, 24.23. So just tape reading, nothing serious. I wouldn't really ever trade at this time. This is just me looking at the new week opening gap. Maybe sometimes I will, but it would just be demo, and it would also be not on a day-to-day because price is not moving that much, and so it would be a lot more stress. Versus tape reading, it's just fun. That's it. So it's fun, and I'll be out in 5 minutes, so it doesn't really matter whether this happens to me or not, or sorry, whether this happens or not. It's not important to me. So yeah, came up into these highs, even though these do not look relatively equal. Right here, just because it is in a imbalance, I'd allow it to kind of form like a 3 drives pattern. So 1, 2, 3. But if it goes any higher than this, then I'd be actually more than happy to see that, because that means that essentially it probably is not in a hurry to get down to this consequent encroachment and then fill in this little gap right here. So because it's not in a hurry, that would it would pan out longer than 7:30 is what I'm saying. So let me think. Anything before I close this? Think of this low. Sorry, think of this level and this level. These two levels. You once again would write it on your notepad. And I'll do the same thing. I'll write it on my notepad. And it would just be like we talked about. saving your meal for the next day. So my interest is here and here. And I'll just check the dollar before I go. Yeah. Yep. Alright. Oops. I wonder, can you hear the wind? At 7:28:45, can you hear the wind? It's very loud. Very loud. So even though we have this bearish order block mean threshold here, and it traded up into the high perfectly, I do like the idea of it just staying near this level. So as long as it's gravitating up to it every single time, so like the range essentially would be here and here. And so I want to see it stay in that range, and every time it goes and trades lower, I just want to see it pop back up and trade, back to the halfway of that range and above for premium. And that would provide a nice sort of risk off scenario, even though it's not creating new highs. But that would eventually be like my target, and then that lends the idea to this trading lower into the new week opening gap high. And then NASDAQ right here. It's a little busy, so I'm just gonna remove some stuff. Keep that there. Yeah. So, like I said, NASDAQ can come down. What was I saying about the S&P? Sorry. Yeah, if the S&P just goes down below here, this low, so then that high, and NASDAQ a little slower, but what I'm noticing here is that NASDAQ is like holding out before the S&P every single time. So S&P is like closer to its targets, but NASDAQ is not, like, relative to the S&P. But it's still gonna move more, but it'll hit those levels later, if that makes sense. So it's essentially the Six Sister approach, and NASDAQ right now is the Six Sister. I'm not really saying that S&P is like a strength leader or like a weakness leader. I'm just saying that right now, the pattern is, of this new week opening gap, S&P is moving to its targets faster. And that's just based off of that high and this SIBI. So I'm going to close this one out now. But if you're watching this, you'd be looking for this low, and then the way you know that things are about to switch is using one of these levels as like inversion. So you don't want to just start buying everything that goes up. You want to wait for a reasonable catalyst, and you have to think that what would switch the bias from this consequent encroachment back to this high. And if we go back above this high, can it make it higher than this? And then likewise, if we're getting below here, can we clean these lows here? So very simple. This range is what sets the tone for Monday.